time now for the Nigeria market update, and we're joined by Rele Adesina, who is Head of Research at Stanbic IBTC Bank. Morning, Rele. The exchange looked pretty strong yesterday. Good day for stocks, 3.2% up on the all-share index for the NSE. Do you expect a rally here? What's going to happen next?
Morning, David. Hi. Yesterday's performance was largely driven by, the strong uptick in Dangote cement. Large cap stock rising 10% on the day. I think that we have seen a bit of uncertainty. The market kind of trading within a bit of a range, and I'm not sure that we're going to have a broad-based rally on the back of this. We think that. Obviously it was a strong performance, and there's scope for further uptick in that name, but not necessarily a broad-based rally in our view.
Right, well, there have been quite a few results released recently. It'd be good to have a look at them. Let's talk First Bank firstly. Quarter one numbers, they'd released full year numbers on Tuesday. So what about the quarter and the full year for First Bank?
First Bank's full year numbers were strong, but a little bit behind our expectations. I think that it was a sort of a good rounding out of the sector reporting for the larger banks. We're just waiting for UBA now, and I think that the sector has broadly gone through that unscathed. I think that some of the smaller banks have been a little bit more patchy, but I think that the confidence in the larger banks to deliver remains intact. As far as Q1 numbers are concerned, they started more strongly. Cost to income performance looks to be on track. The loan growth, however, was rather muted. Although given the 23% that was delivered last year, we think that it's not entirely surprising that the First Bank may want to start 2013 a little bit more cautiously.
So does that translate into a re-rating for you? What's the target price that you're looking for now after those results?
Sorry, I can't.
I know it's a bad line.
I didn't hear the question.
In terms of re-rating the stock, does this cause you to revise your view of where the stock's going?
In terms of re-rating we'll wait until the conference call, which is actually unfortunately going to be about another 2 weeks away, to really sort of walk through some of the trends that we saw in the full year and in the first quarter. One of the things that we were particularly encouraged by with First Bank was asset quality. I think of the big three, it has been probably relatively weaker on that front, and it's certainly been a metric that we think investors have been more concerned about with First Bank vis-a-vis other banks. But they are actually leading the pack on the non-performing loans front, and actually also we're seeing good control on operating expenses, even though they've been adding branches at a faster rate than their peers. So we'll wait until we get a bit more detail on the outlook on the conference call before we figure out our position on ratings and target price.
Meanwhile, perhaps, really, we could talk about the banking sector as a whole in Nigeria. There's been loan growth. That's been robust. Operating expenses, however, have also gone up in 2012. What's that balance going to be between growth and costs in the sector as a whole?
The outlook for costs as a whole, did you say?
Yes. In the sector as a whole.
Well, I think it varies from bank to bank. I think it's a focus for everyone. And as far as we are concerned, given the environment that we're now in, where there's regulatory changes, Sorry?
Carry on, Rele.
Sorry. Well, in terms of the way that the sector is this year, we still maintain that asset quality, efficiency, and cost of funding are going to be the three key drivers for performance. Obviously there are still branches that are in a more expansive mode than others. So banks like First Bank to some extent and Diamond Bank among their peer groups both indicate that they intend to add branches incrementally to sort of round out their footprint in the country. Banks like ETI, for instance, are also extremely focused on cost, and we're seeing efficiency improve. Some of the smaller banks we think are struggling a little bit. The likes of Sky and to some extent FCMB had a relatively weak start in the first quarter as far as cost is concerned. So I think, to be honest with you, it's a mixed bag, but it's going to be a key determinant of performance for the full year, given a more muted expectation on loan growth and probably a more testing environment for cost of funding. So it's something we'll be watching, and I think that on balance, the larger banks are inclined to fare better than the smaller ones.
Well, another company that reported yesterday, UAC, and I always say if the revenue is X and the earnings are higher than X, then you're doing well. But this is something exceptional. Revenues up 14%, earnings per share up 73%. That must have been a surprise. Yes,
the earnings per share for UAC were ahead of our expectations. We were expecting around 195 and they've delivered around 257. Obviously, we're looking to get more insights on that on the call, and we believe it's a combination of higher volumes, of improved operating efficiency. But the headline growth is also in part due to some restatements that occurred during the course of the fourth quarter, which was a bit of a surprise to us, given that they'd already made some restatements at the 9-month stage. So on the whole, it looks like a strong performance, and it's certainly been our top pick in the consumer space for quite some time, on the basis that the entry point in terms of valuations were more favourable relative to some of the more established and expensive international subs, but also because the restructuring story we had some confidence in and felt that it was going to bear fruit over time, and felt that perhaps investors hadn't taken full cognizance of that. I think we're starting to see that come through, so it's a name that we like, but obviously again we need to wait for the conference call and discuss in a bit more detail with management what has driven volumes, what has driven the improved operating efficiency, before taking a view on our target price and our outlook for the name.